EOS reported last Thursday. If you all remember, during the podcast, I said the day prior, I wouldn't be surprised if there was a miss on EOS. And boy, was there. So let's click into that. So, I mean, you could just see the chart here, but
Yeah.
EOS missed revenue by almost 40%, and they missed EPS by over 200%. So I didn't know how much they would miss by, but it's definitely a significant miss.
Okay.
With that said, the numbers are still good. Revenue was up quarter over quarter 8%, 8 times, and year over year 7 times. So to me, this just was mainly leadership giving poor guidance, where they were over exuberant of what they thought they could do. And the market really punished EOS. It was down like 40%, I think, after
Yeah.
earnings, roughly.
Yeah.
Um, and I think there was a concern by the market where leadership was being actively deceptive and dishonest. And I'm more optimistic, I think, where I think EOS's leadership, it was coming
Did
from a
you
place of over optimism as opposed to
did you
deception.
listen did you listen to their earnings call?
Yeah.
Yeah, and like, do you feel pretty confident in when you're listening to? I assume it's founder run EOS, right?
I don't think the CEO is the founder. I could be wrong about that, but he's been with the company for a long time.
Okay. I mean, do you when you hear him speaking, is there a high level of confidence in what he's saying, the direction, the sort of strategy
Yeah,
of the company, all that?
I think he's a very level-headed CEO. Like one of the reasons why they went all in on zinc batteries is because the technology was there, not because it was the best, right? So like if you look at something like a QuantumScape where they're working on solid state batteries, they're trying to make a battery that doesn't exist yet, and it's going to take a lot of time and energy to do that, and it could be very successful for them. But with EOS, I thought it was very interesting where they're like, okay, well, what can we start selling sooner? And
Right, right.
that solves a problem. So I think he comes at it from a very level-headed space. So, and they explained why they missed uh,
What's the sort of like
expectations.
quick explanation of that?
In one sentence, it's really just production issues with
Okay.
their factory, and they're
So
actively working on increasing automation with their factories, and they reduced guidance for this upcoming year because they provide guidance at the annual level, not the quarterly level.
okay. So there's plenty of demand for their product. It's just a matter of getting production up and uh, up to
Right.
capacity, basically.
And one other interesting fact that happened yesterday is the CEO bought more shares. He bought like around $350,000 worth of shares. And I know we often talk about on this podcast the opposite side of things of like, what does it mean when leadership is selling shares? But
Yeah.
I was wondering from your perspective, do you think there's any signal when leadership is buying shares, or do you think he's maybe just trying to save face?
No, there. Well, I mean, it could be that he's trying to save face or doing it for I don't know, like maybe the wrong reasons. But buying is a definite signal that the person believes in the company and the future of the company, and is thinking more long term and feels that the shares might be undervalued and wants to have more of them. So that definitely is a signal. Whereas selling doesn't necessarily mean the opposite of these things at all. Selling just means usually in order to be able to buy, you have to also have the money to buy. But selling might mean that you need the money to do something else with it or for diversification in general, because a lot of times people who've been with one company for a long time, 99% of their net worth is tied up to that one company. So, even Jeff Bezos, if you take his net worth and, to this day, despite having sold, more than $10 billion, or I don't know what the exact number is, but somewhere between 10 and $20 billion worth of Amazon stock over the past 20 years. Still more than 90% of his net worth comes from Amazon. So it's largely because of that they don't continue to buy. At this point, it's only going to be sell for those type of founders and management team. So EOS CEO not being a founder is probably correct. He probably came in as a CEO and he probably already had money from success somewhere else. And then
Yeah, he
that
was high up
person
at
buying,
GE.
oh, okay, so that would make sense. And then that person buying shares in the company is like very good signal that the CEO or management team believes in their future and in the direction. So definitely positive signs there.
Yeah, so that was good to see yesterday. And then the last thing, which I totally forgot to mention, is how did I or what did I do after earnings? Is I bought 75% more EOS
EOS.
at
Okay.
at $6.93, and it dropped well below that. It went like below $5.93, but now it's back up to around where I bought in. So it's been very volatile.
You mean it went like it went down 40% the next day, and at that point it was in the close to $7 a share, and then it went down another 40% on top of that, or
It didn't go down another 40%. It went from like $11 to a low roughly of $5.90.
oh wow, so like a total of more than 50%, down more than
Yeah.
50%, or like in a matter of less than a week.
Yeah,
Unbelievable.
in like 2 days, 3 days. Yeah.
Yeah. Ah, God, that's gotta not feel good. But like
Well,
it's I mean,
this is another
yeah,
example of, and I've said this before, like this is a very much a starter position. It is not majority of my portfolio by any means. It's only 2% of my
right.
portfolio. So like I knew, this was a risky stock, and this is why I'm investing slowly in it.
Yeah. No, no, that totally makes sense. But what's funny is that down 50% is also something that has happened to Robinhood, despite being a major company with huge revenues and profits and a reasonable price earnings ratio, even. So it's not completely out of whack, but yet it was down 50% from its highs just in the recent weeks. So it does happen from time to time. Um,
Yes.
even for
And
good companies. So that's not necessarily an indication that it's not a good company.
yeah, just I think going back to what you said last week, sometimes or often the market just likes to overreact on the
Right.
positive and on the negative, and just seems to be an
Right.
example of that.